Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, as you can see, over the last 4 trading days since the market rebounded off that trigger level, which was seen at 62.60, the market hasn't backed away and still likes to, or appears to want to challenge the top side around 64.40, 45. Although just getting through the 60-day moving average and also this trend that's holding at the moment, could see a break of 64.40, 45 and therefore trigger in terms of market being short and pushing up towards 64.90. If it does break 45, then I would sit out for the moment and see how it plays. If we get a sharp turnaround and take opportunity from the fact is that it was just a stop loss squeeze and there could be a bull trap coming back into play above this level. So keep an eye on that. Support on the day seen at 63.65. The euro reached its target on Friday of 107.35 after stabbing a low of 107.26 before rebounding. This on the flip side saw the dollar index, which measures the greenback strength against a basket of 6 major currencies, hit the level of 101. During the upcoming week, we have a few events coming up, one of them being the US unemployment claims, which the forecast is a little bit lower. It's around 3.5 million from the previous above 4. And also we do have the US GDP, along with that with the ECB and also the US Federal Open Market Committee rate decision. As widely expected, both are expected to keep their rates on hold. Now, with the bottom side reached at 107.35, I would like to see a little bit more confirmation from these technicals. And if we see a break above 108.60, 65, then that would see a further rally on towards 109.20 to about 109.85. Wait for the confirmation. As we don't get the break above 108.60, 65, then we may see a retest to the bottom side of this range, as it was only brief. The dollar yen, that is, still remains in a sleepy pattern called a consolidation. As you can see, for the 9th trading day, we're going sideways, but there's still roughly about 3 or 4 candles there that are bearish, and I do expect to see the market move towards the region somewhere around 106.60. Now, taking out that level would give further exposure to the objective that I'm still calling at 105. There's a lot of hurdles towards the upside with 107.75 and 108.25 likely to cap on the day. The pound, since the break of 123.70, the market is back towards the top side of the range again. Until we get a break above 124.45, I still hold to the bear case to 121.60.70 and reassess from there. The bears come back into play on Friday for dollar CAD and now getting closer to its target and seen as a trigger level 139.90, as if a break of this level would expose the region for about a 300-point drop, which is around 136. Any advances should still struggle up towards 141 and above. My call in gold is still a little bit confusing, as the fact is, although I'm still looking for a test to the top side, there is still no trend. So the risk is we still see some big swings into this week. And also with the dollar also breaking slightly down, actually may help the market maintain its momentum and look towards target at this stage at 1,748.52 and reassess from there. The oil a little bit weaker on the start of this week, but still got a lot of hurdles to clear at the upside, and one of them being $22.50.60. Till we get a break of that, we may see a little bit more whipsaw price action like we saw last week. So do be on your guard if you're trading from the long side, because the bears are still around. We could see potentially a range of around 114.5 to around 20.5 into the next coming 2 or 3 days. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new week.